So there's this incredible tax program in the US called a 1031 tax-free exchange, which is if you sell a property that was a rental property, or in fact any kind of real estate that you didn't live in, that was an investment real estate, if you sell it and buy another place within 6 months with some conditions, you pay no taxes on the proceeds. What I'm starting to do at this stage in my investing career is taking buildings that I bought 10 or 20 years ago that have a lot of equity in them, that have built up, and selling them using the 1031 exchange and buying bigger properties with more rents in better locations, just trading up. When you see these big buildings around here that are like 50, 60, 70 units, no one's going and buying those with cash. The vast majority of those deals, in fact, 80% of real estate commercial transactions in the US are 1031 exchanges. People are selling buildings and laddering up to other buildings. What I look for in my portfolio when I'm deciding what to sell is buildings that have sort of small rents, but like a lot of equity. By equity, I mean money I could use as a down payment on the bigger property, where I can get a building in a better location with much higher rents, a bigger mortgage for the tenants to pay off, et cetera, et cetera. You just want to trade into something bigger and nicer. So if you ever wondered how people can afford these giant apartment buildings, they afford them by selling smaller apartment buildings. Our most recent 1031 was a commercial building I bought on Fountain in the downturn. Paid hardly anything for it, but it was really worse for wear, needed a lot of upgrades. The best choice was to sell it and use the equity that it built up as a down payment on a much nicer building.
So that's what we sold to buy Kenmore.
We love our building on Kenmore. It has great tenants, it's historic, and it is such a pride of ownership building. And we were able to do that through the 1031.
Through the 1031.